I don't know if you remember, it was less than a year ago that Elon Musk took to Twitter and said that he thought the stock price of Tesla was a little too high. Do you remember that? And so the question I'd ask you is the stock price a little too high, or are you finding a way to support it and get behind it?
Well, Happy New Year, Andrew. Listen, when you look at Tesla stock, it doesn't trade on fundamental, valuation metrics. It trades on its growth story. It trades on retail investor enthusiasm of the future that Elon Musk has described for everybody, and that's what they're buying into. And the price, when you look at the market cap, I mean, it is really driven primarily by investors' thought that Tesla can continue to grow robustly. And that's why, as Phil said, they grew about 35% last year. The challenge for this year, given the market cap and given the run up in the stock, is how do they continue that growth going forward? That is fundamental to the business. And that's why you see Tesla do so many things, particularly in the last couple of weeks of last year, to encourage deliveries, whether it's, some free full self-driving availability for customers, or delivering, vehicles to customers. And if they don't want to take it in the last week, they actually move to the next customer. So growth is absolutely important to support that market cap going forward.
Mark, what does the landscape look like as you see it in 2021 and 2022 in terms of EV competitors and some of the other big names, of course, coming out with competition? Is it competition?
Yeah, for the first time, Tesla is going to be facing real competition in the marketplace. As you look at this year, 2021, you're going to see electric vehicle volumes across the world. Obviously, China sells a lot of them given the government regulations. Europe is next, and then comes the U.S. But here in the U.S., you're going to see a lot of new introductions. You're going to see, Ford coming out with their terrific Mach-E, which is coming into the marketplace. You have VW introducing their ID.4, which is a Model Y competitor here in the U.S. and in Europe. You got some trucks, luxury trucks like the Rivian truck coming to compete with the Cybertruck. So, there's real competition for the first time in Tesla's life that they're going to have to face. And their challenge, as you know, Andrew, is they don't make money on the base business of selling, designing, and manufacturing vehicles. They make it on the regulatory credits. They make it on other services, whether it's insurance or selling things like full service driving. They absolutely need to make sure they improve their margins on their vehicles. And they're going to have to do that in a market that's a lot more competitive this year, both here in the U.S., but also Europe and in China.
So let's talk about two things there. You talked about the regulatory credits, which are a key component of their profitability, or at least has been thus far. What does that look like in 2021, 22 to you? And then the secondary issue is, as you just said, from a margin perspective, just on the manufacturing side, what can they do that they're not doing right now?
Well, on the regulatory side, the good news here in the U.S. is with the new administration coming in, the Biden administration, you're probably going to see very early on some increased incentives for selling electric vehicles. That is absolutely going to help Tesla here in the U.S. But as I said, it's also going to help some of those new competitors. If you go over to China, which is the other absolutely key market for Tesla's success, the Chinese government announced as of January 1st that they're actually reducing their electric vehicle incentives by 20% this year. So that'll put a little bit of drag on the marketplace. But overall, here in the U.S., it'll be good news, a good backdrop for selling more electric vehicles. And in the case of margins, listen, Tesla's challenge is they have to what they call localize their production, which they've done in China, for example, for the Model 3. And that's why they've been able to take like 5 price cuts in the last year. They're about almost fully localized there. So for them to continue to improve their margins, they have to improve their efficiency, their manufacturing efficiency. They have to continue to innovate in batteries. And as you know, in September, they had a battery day and they said they were going to significantly reduce the cost of their batteries. That is absolutely key to allowing them to improve their margins.
Shepard Smith here. Thanks for watching CNBC on YouTube.